Welcome back to the deep dive. Today we're really getting into Rocket Lab Corporation, ticker RKLB. And the big question we're wrestling with is this. Is Rocket Lab methodically building this, unassailable stronghold in the new space economy, sort of the essential picks and shovels provider?
Or is its current, let's face it, high valuation basically pricing in a perfect, flawless future? A future that, well, might just be a bit too optimistic, setting them up for a really long, potentially risky countdown.
Exactly. That's the core dilemma. And we're unpacking it using a pretty comprehensive stock analysis report. It drills down into their fundamental strengths, the risks involved, and crucially, what the company might actually be worth.
Yeah, and our mission here, like always, is to give you that shortcut, help you get properly informed, pull out the really important nuggets so you understand what truly matters with RKLB.
Absolutely. So context first. We're recording this on June 26, 2025. Rocket Lab closed yesterday at $32.17. Now, you might see a slight dip today, but don't read too much into that.
Right, it's coming off an incredible week. The stock surged, over 24%? Mostly because they announced that amazing two-day launch turnaround for Hawkeye 360.
Incredible agility. So yeah, any dip now is likely just natural market consolidation, not, bad news.
Exactly.
Okay, before we launch into the nitty-gritty, just a quick word from our partners. Please remember to like and subscribe to the Stock Analytics AI YouTube channel. It's just $4.99 a month, and members get priority deep dives on tickers.
And we're covering all the S&P 500 stocks over the next few months, so members get that exclusive priority access.
Plus, if you want a one-off deep dive on a specific stock, maybe one we haven't covered yet, you can always drop us a super another thanks.
Good way to get specific info.
Okay, let's kick things off. We need to understand the company itself first. So let's jump into Chapter 1, business analysis. To really get Rocket Lab, you got to look beyond just the rockets, right? They have this, what the report calls a dual-engine business model.
That's right. Engine 1 is launch services. That's their space trucking division, basically, focused on delivering small satellites with their Electron rocket. That's what they're best known for. But Engine 2, space systems, is really interesting and growing fast. This is the picks and shovels side. They provide high-performance spacecraft components, even complete satellite platforms.
And the genius here isn't just diversification, is it? It's strategic.
Absolutely. It's a strategic move to de-risk the whole operation. If launch services hit a rough patch or, face more competition driving down prices.
Which could happen.
Exactly. Then Space Systems acts as this vital buffer. It provides stable, potentially higher margin revenue, something a pure-play rocket company just doesn't have.
Okay, so let's talk products. Their arsenal is pretty impressive. The Electron rocket is the flagship.
Undisputed market leader in dedicated small-sat launch. It's, the second most frequently launched rocket in the U.S.?
Yeah, over 66 launches, 200-plus satellites delivered. That reliability, that frequency, it's huge for customers paying millions for their payloads.
But while Electron is a workhorse now, the Neutron rocket, that's the future. That's the potentially transformative piece.
This is the bigger one, right? Reusable.
Exactly. Next gen, fully reusable, medium lift. Designed for 13,000 kilograms to LEO. It's a massive step up for them. A quantum leap, the report calls it, aiming to compete directly with the bigger players, like SpaceX, in a whole new market segment.
Then there's the Photon satellite bus. You described it as a versatile chassis.
Yeah, basically a standard base customers can build their satellite on. And it's clearly good stuff. NASA's using it for missions to the moon, Mars, even that private Venus mission.
Wow. And the components, too. The space systems component.
Right. Things like their star array, solar arrays, super lightweight, customizable for small sats, optimizing power without adding too much weight.
Yeah.
And frontier radios, reaction wheels, separation systems. The list goes on. They make money from these, even if the satellite doesn't launch on a Rocket Lab rocket.
Smart. So market position. They're the leader in dedicated small launch.
Global leader, yeah. And they've got the infrastructure. 3 launch pads, 2 continents, New Zealand and Virginia, USA. Gives them serious flexibility.
And their components are everywhere.
Pretty much. In 2023, components they made were used in something like 38% of all global orbital missions. That's significant reach.
So pulling it together, their primary value proposition, it's mission assurance, basically.
That's the core of it. Reliability, high launch frequency, end-to-end management. You're trusting them with expensive hardware.
And that Hawkeye 360 rapid reschedule launching in just 2 days, that's mission assurance in action. Real-world proof.
Wouldn't ask for a better example of their agility. Okay, so let's connect this to the broader industry analysis, the new space race. This whole industry is just booming.
The numbers are pretty staggering, like $421 billion this year, projected over $511 billion by 2029, potentially hitting $1 trillion by the early 2030s.
It's massive growth. And the real sweet spot for Rocket Lab right now is that small satellite sector.
That's the $5.9 billion going to $33.7 billion by 2035, a 17% compound annual growth rate.
Exactly. This whole LEO revolution, think Starlink? Kuiper needs launch providers like Rocket Lab. They're a key enabler.
Okay, but what about the competitive landscape? It's not like they have the field to themselves.
Oh, definitely not. SpaceX is the dominant force, obviously. They've really driven down launch costs, especially for bigger payloads. Electron found its niche with dedicated small launches.
But Neutron puts them head-to-head with SpaceX in medium lift.
Directly. It's a bold move. You've got other players too, like Virgin Galactic, but they're more focused on tourism. Some smaller launch companies have stumbled, which actually helps solidify Rocket Lab's position as the #2 commercial provider in the U.S. right now.
And the regulatory environment, that's going to be tough.
Huge barrier to entry. You've got the FAA for licenses and safety, the FCC for communication spectrum, and ITAR, the U.S. arms regulations. That stuff is complex.
Didn't Rocket Lab do something unique with ITAR for their New Zealand site?
They did. It was groundbreaking. They essentially navigated it to set up their private launch site there, which required a whole new treaty between the U.S. and New Zealand.
Wow, so that gives them flexibility outside of crowded U.S. launch ranges.
Exactly. Critical flexibility. It allows for that kind of responsive launch like Hawkeye 360, avoiding the bottlenecks you sometimes see at U.S. ranges. It's a major competitive advantage.
So the barriers to entry are serious. Astronomical capital costs.
Billions to develop a new rocket. Easily.
Extreme technological complexity, those regulatory hurdles. And just building trust, right? Having a proven track record.
Takes years. Dozens of successful launches before customers really trust you with their most valuable assets. That moat is deep and wide.
Which brings us to Rocket Lab's own competitive advantage. Their brand strength is built on that track record. Reliability.
Definitely. And their cost advantages come from that deep vertical integration. They make their own Rutherford engines.
Those are the ones with the electric pumps, right?
Yeah.
Novel.
Yeah, pioneering electric turbopumps. Lighter, simpler design compared to traditional ones. Radically simplifies production. Plus, they were early adopters of 3D printing for flight-ready engines. Slashes costs and build time.
You also mentioned emerging network effects and switching costs. How does that work?
Well, by offering the whole package space systems, the photon bus, solar arrays, software, they become a one-stop shop.
So it's convenient.
It's more than convenient. Once a customer designs their satellite around Rocket Lab components, switching to someone else for launch or parts becomes really difficult and expensive. It creates this flywheel effect, locking in customers and revenue. It's a subtle but powerful moat.
Plus, they're unique and proprietary assets. The Rutherford engine itself owning private launch sites in the U.S. and NZ, that unique NZ regulatory setup.
Exactly. The analysis emphasizes that this whole push into space systems isn't just about adding revenue streams. It's a smart defensive move against launch becoming a commodity, especially with SpaceX driving prices down. They're transforming into a mission solutions provider.
Okay, great overview of the business. Let's pivot now to the people in charge. Chapter 2, Management Evaluation. Sir Peter Beck, the founder, CEO, CTO. He's central to the story.
Absolutely. And his background is pretty unconventional for a space CEO. Largely self-taught engineer from New Zealand. Started with a rocket-powered bicycle.
You have to admire the passion. Does that hands-on engineering focus still drive the company?
It seems to. The report suggests his engineering-first ethos is really baked into the company culture.
Yeah.
He's not just a suit. He's deeply involved technically. That combination of vision and deep technical understanding is pretty rare and arguably a big asset.
And their crisis response history. Space is hard, failures happen.
They've had them. July 2020, May 2021. But the key was how they handled it. Transparency, thorough investigations, quick but safe return to flight. That builds huge trust with customers.
And that Hawkeye 360 reschedule we keep mentioning, that shows operational maturity too, right? Delivering under pressure.
Definitely. It speaks volumes about their capabilities. And their communication transparency and ethical reputation seem pretty high. Detail updates, investor days, active on social media.
They even publicly changed their mind on reusability, didn't they?
Yeah, that's a great example of intellectual honesty. Initially, Beck was skeptical about reusing Electron. arguing it didn't make economic sense for small rockets. But they adapted, figured out a novel way to recover electron boosters, and then designed Neutron for full reusability from the start. That shows they aren't dogmatic. They adapt to the data and the market.
Okay, let's talk capital allocation. Clearly, they're in growth mode. No dividends or buybacks.
Nope. Every dollar is going back into the business, primarily into Neutron R&D. That means the new manufacturing complex, developing the Archimedes engine. It's a massive critical investment for their future.
And their M&A strategy. They've bought quite a few companies.
Very strategic buy and build approach, acquiring capabilities they needed for vertical integration reaction wheels, flight software, solar panels, separation systems. Even plan to buy Minoric for laser comms, though that deal didn't proceed. It's all about building out that picks and shovels offering, making space systems more comprehensive.
So share buybacks and dividends, none. As expected for a company like this at this stage.
Correct. Totally focused on reinvesting for growth.
What about return on invested capital, ROIC? It's negative, right?
It is, yeah. Around a negative 15.5% normalized.
Ah.
Which looks bad on the surface, but you have to remember it's because of those huge investments, especially in Neutron, which isn't generating revenue yet.
So the question isn't about the current negative ROIC.
Exactly. The question for investors is, what will the future return on these massive investments be once Neutron is flying and space systems matures? That's the bet.
Okay, that makes sense. From management's vision, let's ground ourselves again in the numbers. Chapter 3, Financial Analysis. Quick snapshot, 1st June 26, 2025. Price, $32.17. Market cap, around $14.9 billion.
And that 52-week range is wide, $4.20 up to $34.44. Shows the volatility. Average volume around 18.86 million shares, so plenty of trading interest.
Now, performance trends. Revenue growth. You called it explosive?
Pretty much. From about $35 million in 2020 to over $436 million in 2024. It's like 78% growth year-over-year average. TTM revenue is $466 million. Q1 25 was strong, $123 million, up 32% year-over-year. And Q2 guidance is solid, $130 to $140 million. The top line is definitely moving.
But profit margins, that's where it gets tricky. Gross margin is improving, though.
That's the crucial glimmer of hope, as the report puts it. It hit 26.6% in 2024, TTM is 27.25%, and the non-GAAP guide for Q2 25 is 34.36%. That shows the core operations are getting more efficient. That's positive.
But operating and net margins are still...
Severely in the red, yeah.
Oh.
Operating margin around negative 44%, net margin similar, roughly a $207 million net loss recently. That's the cost of scaling up and investing heavily in Neutron R&D and SG&A for global expansion.
And free cash flow generation follows that trend. Still burning cash.
Yes, negative FCF. Burned about $103 million in 2024. It's a risk, obviously. But the burn rate seems to be improving. Some analysts are actually projecting potential break-even as early as 2026.
Is that realistic given the Neutron investment?
It's ambitious, but not impossible if launches ramp up and Space Systems keeps growing its margins. But it hinges on execution. For now, let's look at financial stability. Consistent net losses, we know that.
What about debt?
Debt to equity is 0.97 as of March 31st. So meaningful leverage, but not necessarily extreme for such a capital-intensive industry building factories and rockets.
And their short-term position.
That's actually quite healthy.
And
The current ratio is 2.08, meaning their liquid assets are more than double their short-term liabilities. That's a crucial buffer, provides runway despite the cash burn.
okay, so they have some breathing room. And dividends still none expected.
No, definitely not anytime soon. Okay, so valuation analysis. Traditional PE is useless, obviously, with negative earnings, minus 80-something.
Right. So we look at price to sales,
Yeah.
which is...
Around 35.7,
Yeah.
which is, well, huge. Compare that to the typical aerospace defense industry average, maybe 3x to 6.5x sales.
Wow. So that PS shows the massive premium baked in. The market is expecting Neutron to be a home run.
Absolutely. It's pricing in enormous future growth and success. Trying an intrinsic valuation with discounted cash flow, DCF, is super speculative here.
Because future cash flows are so uncertain.
Exactly. The models spit out a ridiculously wide range from under $8 to over $65 a share. The report synthesizes this down to a broad estimated range of maybe $25 to $45 per share. But the assumptions driving that range, future growth rates, especially Neutron's impact, and the discount rate used because of the risk and volatility are huge variables.
So this high cash burn, but also the healthy current ratio, it creates this race against time feeling.
That's a good way to put it. They have liquidity now, but they need Neutron to succeed and succeed relatively soon. to reach self-sufficiency and avoid potentially needing to raise more cash, which could dilute existing shareholders. It really raises the stakes on Neutron's execution.
Makes sense. Okay, let's move beyond the financials. How does the market feel about Rocket Lab? Let's dive into Chapter 4, Market Sentiment.
It's interesting. Analyst ratings. The consensus is a moderate buy. You've got 8 buys, 4 holds, 0 sells. Pretty positive overall.
But the price target?
That's the contradiction.
Yeah.
The consensus 12-month target is $28.10, which is actually below the current share price of $32.17. Even the high targets, around $34, $35, don't show massive upside from here.
So analysts like the company but think the stock might be a bit ahead of itself.
That seems to be the message. Bullish on the long-term story, but maybe cautious on the near-term valuation. It probably attracts investors with a long horizon, maybe less so short-term traders.
And the recent news impact and general media tone?
Overwhelmingly positive. That Hawkeye 360 turnaround got huge press. New DoD contracts always make headlines. Analyst upgrades feed the bullish narrative. It's a constant stream of positive reinforcement lately.
Okay, market indicators. You mentioned short interest is high.
Very high. 17.38% of the float. That makes Rocket Lab a classic battleground stock.
Meaning?
Meaning there's a big chunk of the market betting against it, pointing to the unprofitability, the cash burn, the valuation. But that high short interest also creates short squeeze potential. If good news hits, those short sellers might scramble to buy back shares to cover their positions, driving the price up sharply and quickly.
And technically, moving averages.
The stock, $32.17, is trading well above its 50-day average, $25.13, and its 200-day average, $24.07. That signals strong, bullish momentum, technically speaking.
So the confluence here is a stock driven by a powerful story about the future.
Absolutely. It's a narrative-driven stock right now. A tug-of-war between the bulls focused on Neutron and disruption and the bears focused on current financials and valuation. Leads to high volatility.
Got it. Okay, let's look inside the company. Chapter 5, ownership structure. Who actually holds the shares?
About 54.6% is held by institutions. The big index funds, Vanguard, BlackRock, State Street. Also thematic ETFs like aerospace and defense funds see it as part of that industrial base. D.E. Shaw, Coastal Ventures are also significant holders.
And insider holdings. Peter Beck must own a fair bit.
Yeah, insiders hold a substantial chunk, around 14.85%. Beck and early VCs are the main ones. That alignment can be positive, however.
There's a but.
There is. The report flags a potentially concerning trend. 18 insider sales and 0 insider purchases in the last 6 months. Net selling of about $30.3 million in the last 90 days.
How should we interpret that?
You need to be nuanced. Sales from VCs, like Coastal Ventures via Matthew Ocko, are often just part of their fund's life cycle. They invested early, now they're taking some profits. That's normal.
But what about executives?
Insistent sales by operating execs, the CFO, the COO were mentioned, could be seen differently. It doesn't automatically mean they think the company's doomed. Insiders sell for lots of reasons, diversification, buying a house. But a pattern of selling with no buying might suggest they feel the stock is fully valued, perhaps even richly valued, right now. It's a potential red flag to watch.
So the ownership concentration is pretty high between institutions and insiders.
Yeah. Which means their buy-sell decisions can really move the needle on the stock price. Adds to the potential volatility.
Okay, makes sense. Now for the crucial part, what could go wrong? Chapter 6, risk assessment. Let's use that SWOT framework. Strengths, weaknesses, opportunities, threats.
All right. Strengths. Proven electron tech and reliability. That vertical integration moat we talked about. Visionary founder-led management with Beck. Strong customer base like NASA, DoD. Solid foundation.
Weaknesses. Chronic unprofitability and high cash burn are top of the list. The premium valuation. Heavy dependency on Neutron succeeding. And that insider selling pressure we just discussed.
Opportunities. Huge small satellite LEO market growth. Neutron opening up bigger launch markets. Geopolitical tailwinds, defense spending on space is increasing, margin expansion potential from space systems, maybe even satellite data services down the line. Lots of potential upside.
But balanced by threats, intense competition, especially from SpaceX. Huge execution risk launch failures are always possible. Neutron could face delays or technical hurdles. Macroeconomic headwinds like interest rates and inflation, and geopolitical or trade risks.
Let's dig into those macroeconomic factors. Higher interest rates make borrowing more expensive for things like building neutron factories. They also increase the discount rate used in valuation models, which pushes down the calculated intrinsic value.
And inflation.
Pushes up costs for materials, aluminum, composites, electronics, and for skilled labor. That could squeeze those improving gross margins and delay profitability. An economic recession could also hurt, especially demand from commercial satellite customers.
The report also mentioned hypothetical U.S. imposed tariffs of 2025. How would that impact them?
It's a good thought exercise. New tariffs on things like imported steel, aluminum, electronics would likely hit Rocket Lab directly because aerospace supply chains are so global.
So higher costs.
Higher costs, yes. Margin compression could make them less price competitive, might force them to disrupt their supply chains to resource components, and there's always the risk of retaliatory tariffs hurting their international sales.
It's that paradox you mentioned earlier.
Exactly. Geopolitical tension is a tailwind because it fuels defense contracts, which Rocket Lab benefits from, but it's also a headwind because it can lead to protectionist trade policies like tariffs. Investing in Rocket Lab is partly a bet that the benefits they get as a trusted Western defense partner outweigh the potential friction from trade disputes.
Fascinating dynamic. Okay, let's bring it all home. Final segment. Chapter 7. Conclusion. Let's synthesize the bull and bear cases.
Right. The bull case. Rocket Lab is firing on all cylinders in small launch. Neutron is potentially game-changing. Space Systems provides a strategic moat and diversification. They benefit from defense spending, and their balance sheet is currently healthy enough to fund near-term plans.
And the bear case. The valuation is sky-high, demanding near-perfect execution. They're still burning cash and aren't profitable. Neutron carries immense execution risk. Delays or failures would be very damaging. Insider selling raises questions. And SpaceX is a formidable competitor. It's a long and risky countdown.
Our valuation summary again. PE is irrelevant. The DCF range is wide. Maybe $25 to $45 is a reasonable synthesis, but highly speculative.
So the concluding outlook, the current price, $32.17, is right in the middle of that speculative range, but significantly above the analyst consensus target of $28.10.
Yeah, it really captures the debate. The price reflects huge optimism about the future. Investors have to look past the current losses and the very real risks. The value proposition is almost entirely based on future potential.
So whether it's an attractive entry point today really depends on your personal conviction.
Absolutely. It boils down to your confidence in Peter Beck and his team to navigate these immense challenges, execute flawlessly on Neutron, and actually deliver on that incredibly bold vision for the future of space.
Okay, a final thought to leave our listeners with. Considering Rocket Lab's incredible ambition, but also the immense challenges ahead, does its journey remind you more of a meticulously planned, precise orbital insertion? Or is it more like a high-stakes, high-risk slingshot maneuver around a giant planet, hoping to get flung into the right trajectory?
Something to ponder.
Indeed. That wraps up our deep dive into Rocket Lab. If you found this analysis insightful, please do like and subscribe to the Stock Analytics AI YouTube channel. Remember, members get priority access to our deep dives. All S&P 500 stocks are coming up over the next few months.
And you can always grab a one-off deep dive on a stock you're interested in by dropping a super thanks.
One last important note.
Yes, this analysis was generated by an AI system. It's for educational purposes only and should definitely not be considered financial advice. Please do your own research or consult with a qualified financial advisor before making any investment decisions.